India's Minister of State for Finance, who's warning that the GDP could be hit through trade channel, likely imported inflation impacting consumption, investment. But he said that the government is immediate and corrective and facilitative measures which have been taken amid the ongoing Middle East conflict. Let me go across to my colleague Rumi Mishra for more on this. Rumi, if you can take us through the details of this statement that is coming in.
Yes, Shivani, the junior finance minister has warned that the GDP could be hit likely through the trade channel, especially since the Strait of Hormuz has been closed amid the Middle East conflict. However, I'd like to turn our attention towards something else as well. Ernst & Young has released a report an hour ago, and basically what it says is the conflict may shave 1% off of India's GDP growth and raise inflation. The report reads, and I'm quoting it here, the ongoing conflict in Middle East has significantly disrupted global crude oil and energy markets by affecting supply, storage, transportation and prices. It also added that if the impact of the conflict continues through the next fiscal year, which is after March, India's growth trajectory could weaken while inflationary pressures could rise. Ernst & Young EY has also estimated that India's real GDP growth could erode by around 1 percentage point, while CPI inflation could rise by approximately 1.5 percentage points from their baseline estimates of 7% and 4% respectively. So this is a major breaking that has been coming up recently, Shivani. A lot of updates we've been getting. The report also notes that the risks arise at a time when India's economy is otherwise showing strong momentum. High-frequency indicators for January and February 2026 indicated an ongoing growth momentum. However, there were early signals of some moderation owing to the challenges posed by the ongoing geopolitical uncertainties. Highlighting the transmission channels of the shock, the report underlined India's vulnerability to global energy market disruptions. India, which imports nearly 90% of its crude oil requirements, is also highly dependent on imports of natural gas and fertilizers as well. So consequently, the Indian economy is particularly vulnerable to such external shocks. This report cautions that the impact could spill over across other sectors as well, affecting both supply and demand conditions. So the junior ministers take that, this GDP could be hit through trade channels, likely imported inflation, impacting consumption, investment, are coming through according to EY as well. He had, however, confirmed that the government is immediate, corrective and facilitative and taking all measures as required amid the ongoing Middle East conflict, and that could be seen especially in the case of fuel prices. Shivani, remember, diesel and petrol prices have been chopped down as taxes have been cut off, especially considering how crude oil has been harder to obtain from because of ships not being able to cross the Strait of Hormuz.